Monday Massacre brought to you by Kazuo's Carry Chaos, Kamalena Mikes, and Jump's Crypto Dump. By Tyler Durden. Monday, August 5, 2024, 3 p.m. Well, it started with a Japanic, but really Asian markets were just playing catch down to Friday's moves. Yen strength, carry trade unwind accelerates post-BOJ, weight on stocks and topic had its worst day since the 1987 collapse. Source, Bloomberg. How much more pain will Kazuo Ueda unleash on the Japanese public before he pivots dovish once again? You can't unwind the biggest carry trade the world has ever seen without breaking a few heads. That is the impression markets give us this morning, Kit Jux, chief foreign exchange strategist at Societe Generale, said in a research note published Monday. In the US, the narrative transition from soft landing to hard landing stoked the flames of the sell-off, and some pointed to Kamala Harris overtaking Trump in the prediction markets as exacerbating equity weakness. Source, Bloomberg. At their worst, small caps and Nasdaq were down 6% today, before dip buyers stepped in and lipsticked this pig of a day. By the close, all the majors were down around 3 to 3.5% on the day. Goldman Sachs trading desk noted that overall activity levels are surging up plus 63% versus the trailing 2 weeks, in line with market volumes up plus 99% vs the 10-DMA. Our floor tilts plus 6% better to buy, driven by HFS, while lows just flipped from net seller to net buyer. HFS are plus 11% better to buy and shockingly are better to buy in every sector X writes. Demand heaviest in tech, cons disc, com SVCs and fins, which are all plus $100 net better to buy. Lows are now flat on the day after starting out minus 10% better for sale. A bit more dispersion in their sector skews, buying com SVCs, cons disc, HCare and fins while selling tech, staples, mats and macro products. The S&P closed below its critical CTA pivot threshold. The S&P 500 broke below its 100 DMA. Nasdaq broke below its 200 DMA but found a supportive bid there. Most shorted stocks were slammed again at the open. Source, Bloomberg. Mag 7 stocks are now down a stunning $3 trillion from their record highs. Source, Bloomberg. NVDA is now down 35% from its record highs. Source, Bloomberg. The AI trade is rapidly unwinding, breaking below its 200 DMA. Source, Bloomberg. VIX surged to 65 intraday, its highest since COVID lockdown chaos, before vol sellers stepped in, but it ended up around 35 still. Source, Bloomberg. VVIX exploded higher, near all-time record highs. Source, Bloomberg. The Treasury market was chaotic today, but you'd barely notice if you were checking close to close. Yields collapsed by almost 20 bps intraday, twice, before squeezing back higher and ending practically unchanged. The long end ended up outperforming on the day, 30y-4 bps, 2y plus 1 bps. Source, Bloomberg. The yield curve, 2s10s, briefly disinverted today for the first time since June 2022. Source, Bloomberg. The dollar dropped again, testing the mid-May lows. Source, Bloomberg. Crude oil plunged back to test its lows since February today, $71 handle for WTI. Source, Bloomberg. Gold was monkey-hammered lower today too, breaking below $2,400 before finding support. Source, Bloomberg. Crypto markets were clubbed like a baby seal overnight amid reports that jump trading was liquidating its holdings. Bitcoin crashed below $50,000 for the first time since February, basically erasing all the post-ETF gains, then bounced notably off those lows. Source, Bloomberg. Finally, the market appears to be testing the Fed, demanding almost 140 bps of cuts in 2024 at the peak today, as 2025 cuts are brought forward. Source, Bloomberg. Now, don't forget that this is the third time the market has gone to the limit on Fed rate cuts in the last year. Will Powell fold and unleash the put? 41,724387. More market stories on Zero Hedge. Black Monday, futures plummet as VIX hits 62, Japan suffers worst point drop in history. Japanic Monday, Japanese bonds, stocks halted after plunging into bear market as everything crashes everywhere. Bronx Ada resigns after being caught on camera allegedly attempting to meet 13-year-old boy. In our preview of last week's BOJ, we refrained from giving details and merely shared a candid assessment of what we thought the result would be. BOJ preview: whatever is the dumbest possible thing that can happen, is what will happen. 100% guaranteed. Zero hedge, at zero hedge. July 30th, 2024. And we were right, because by deciding to hike rates into an economic showdown, the BOJ, which as we noted last week changed the rules again, has unleashed a financial apocalypse by creating a positive feedback loop that culminates with a deflationary collapse of all assets, as the bank now goal seeks a surge in the yen and thus deflation and economic devastation, which has led to not only to the Nikkei promptly entering a bear market from its all-time high hit just 3 weeks ago and wiping out all of its year-to-date gains, not to mention collapsing 15% since last week's BOJ meeting, which we knew would be a disaster. Which has also just suffered its biggest 2-day drop in history, surpassing Black Monday. But also the halt of trading of both its peer, the Topix circuit breaker triggered for Topix index. As it too enters a bear market. Japan's Topix index falls 20% from July peak. And the entire Japanese bond market. Circuit breaker triggered for Japan government bond futures. Meanwhile, among today's free-falling stocks are such names as the iconic Nintendo. Nasdaq 100 futures drop as much as 2%. And perhaps something more troubling, is that Japan's megabanks are in free fall, starting with Mizuho. Mizuho shares fall as much as 12%, most since March 2020. And ending with Japan's largest bank, it's JP Morgan, if you will, which just plunged the most on record. MUFG shares fall as much as 21%, record intraday decline. It's not just Japan, Korea is getting swept in as well. KOSPI index slumps, taking losses from July peak to 10%. And of course, the US, where Nasdaq futures crashing as much as 2% and the S&P is down 1.1%. Nasdaq 100 futures drop as much as 2%. And then there's Bitcoin, which, well, let's not even go there. So strap in folks, the day is just getting started. Good morning and welcome to a global market meltdown, sparked by last week's catastrophic BOJ decision to hike rates by 0.15 bps, which in turn crushed the $20 trillion yen carry trade, sent the yen exploding higher and wiping out trillions in highly levered investments, leading to a cascade of selling and forced liquidations, which has resulted in a historic market crash in Japan and a rout everywhere else. In the US, futures are sharply lower, with tech plunging as the global AI/semis trade, itself a byproduct of the carry trade, is sold and small caps are reshorted. The Nasdaq 100 is set for its biggest opening drop in more than 4 years, as investors bracing for days of volatility amid rising concerns over a slowing US economy and overheated gains in the tech sector. Nasdaq 100 futures fell as much as 6.5% before paring losses to about 4.5%. That puts the tech-heavy index on track for its worst open since the pandemic days of March 2020. The Nasdaq dropped into a correction Friday as investors freaked out over elevated valuations and the high cash outlay for investments in artificial intelligence. The Philadelphia Semiconductor Index is already in a bear market, tumbling 22% from a peak, even before Monday's open. Meanwhile, S&P 500 futures were down 3%, while those tracking the Dow Jones Industrial Average declined 1.6%. While both Nasdaq and Russell futures have pared their largest overnight losses, brace for more waves of selling as the VIX spikes above 62 and forces margin call after margin call, and volatility sellers are carted out. The highest print since the COVID crash when it peaked just over 80. While US futures are a bloodbath, nobody had it as bad as Japan, whose benchmark Nikkei 225 index recorded its worst ever daily sell-off on Monday, losing 4,451.28 points from the previous day's closing amid panic selling triggered by fears of a possible US recession and the yen's strength. The sell-off was the largest ever in history and worse than in the Black Monday crash of October 1987, when it lost 3,836.48 points. The average closed down 12.4% to 31,458.42. On a percentage basis it wasn't much better, with Better, with the Nikkei's peer topics tumbling minus 12.2%, its biggest one-day drop since the 1987 stock market crash and the second worst day since data begins in 1949, the index is poised for its biggest three-day drop on record. Turbulence in Japan, where the central bank started to raise interest rates as the Fed looks to cut in a historic mistake that has already wiped out trillions in value, is also having ripple effects across global markets of various asset classes. This is due to moves to reverse carry trades, in which investors had borrowed at lower rates in Japan to fund purchases of higher-yielding assets elsewhere, and nowhere has this been felt more than the yen. The USDJPY is down a record 20 big figures from 162 just a few weeks ago to 142 this morning, tumbling more than 3% since Friday. The constant selling has pushed the USDJPY RSI to the most oversold level since 1995. With yen carry trades now being unwound quickly, not only has the Japanese currency notably broken its depreciation trend against all major units, but risk assets that those trades were financed with are also being sold off, wrote asymmetric advisors strategist Amir Enverzadeh, in a note to clients. Back to the US, looking at the pre-market, it's a tech rout for understandable reasons. Many of the best performing stocks were direct beneficiaries of the leverage afforded by the carry trade, and sure enough, all the Mag 7 names are crashing. NVDA minus 9.3%, AAPL minus 8.6%, TSLA minus 7.4%, MSFT minus 4.5%, AMZN minus 3%, Meta minus 6%, Goog minus 5%, and semis are under pressure. Here are all the most notable pre-market movers. NVIDIA falls 12% as megacap technology stocks are bearing the brunt of the sell-off as investor brace for days of volatility amid rising concerns over a slowing US economy and overheated gains in the tech sector. Apple minus 7%, Meta Platforms minus 5%, Microsoft Corp minus 4%, Tesla minus 9%. NVIDIA shares are also down following a report that the company's upcoming artificial intelligence chips will be delayed due to design flaws. Apple stock is also being hurt after Berkshire Hathaway reported on Saturday that it had slashed its stake in the company by almost 50% as part of a massive second quarter selling spree. Cryptocurrency-linked companies tumbled as Bitcoin added to a 13% drop last week that was the worst since the period when the FTX exchange imploded. The weakness in the digital token comes amid a broader sell-off in global stock markets. Coinbase Global minus 15%, Riot Platforms minus 14%, Marathon Digital minus 14%. Kellanova rises 20% after Reuters reported Mars was exploring an acquisition of the snack maker, citing people familiar with the matter. Moderna drops 5% as RBC cut its rating to sector perform, noting an increasingly uncertain outlook. In these sorts of scenarios, investors need to be careful, said Ben Berenger, an analyst at Quilter Cheviot. When sentiment begins to sour, the falls become more extreme than perhaps they should be. The next few weeks is likely to be a volatile one for tech stocks as this new environment plays out. While the US may have just hit $35 trillion in debt for now, that is of secondary concern amid a global flight to safety, and bond yields are lower with the yield curve bull steepening and 2S/10S 4.5 BPS from being fully disinverted as the 10Y tumbles to 3.72%. Today's macro focus is ISM SRVCS, 51.0 survey versus 48.8 prior, senior loan officer survey, and 2x Fed speakers. With the summer low liquidity, the still heavy trend plays that need unwinding and the VIX sky high, this sell-off move could go on for a few days, said Florian Ilpo, head of macro research at Lombard Odier Asset Management. Still, the macro picture itself is not as bad as the market seems to think. Concerns over health of the US economy took center stage after Friday's data pointed to rising unemployment levels in July, triggering a closely watched recession indicator and stoking fears that the Federal Reserve hasn't moved quickly enough to cut interest rates. Investors bid up haven assets such as the yen, while SPO VIX August futures spiked. The key point is the current shift in narrative, from no landing to soft landing, said Florian Ilpo, the head of macro research at Lombard Odier Asset Management. That risk was poorly priced and investors shifting gears fast explains the extent of the move. Elsewhere, treasuries climbed as traders boosted bets on aggressive monetary policy easing by the Federal Reserve this year, with odds of an emergency meeting rising to 25%. US 2-year yields fall 11 BPS to 3.77%. In FX, we already covered the main highlights. The yen soared 3.2% against the greenback, pulling USDJPY down to 142.05. The Swiss franc also outperforms, rising 1%, while the euro adds 0.4%. Bitcoin slumps over 10%. In rates, treasuries retained about half of their steep, front-end led gains during Asia session and European morning, with 2-year yields richer by 13 BP at around 3.75% after falling nearly 27 BP Friday. US yields remain richer by 13 BP to 4 BP across the curve in an aggressive bull steepening move that has 2s10s spread wider by almost 8 BP and approaching disinversion for the first time since July 2022. US 10-year yields trade around 3.75% after reaching lowest since June 2023. Investors continue to price in aggressive rate cuts by the Federal Reserve, with about 55 BP of easing now priced in for September FOMC meeting, 100 BP by November's. In other words, there is about 20% odds of an emergency rate cut already priced in. Similar gains seen in core European rates, where 2-year German yields are lower by around 11 BP on the day. US session includes ISM services data at 10 a.m. New York time. In commodities, oil prices decline, with WTI falling 1.9% to trade near $72.10 a barrel. Spot gold falls $18 to around $2,425 per ounce. U.S. economic data slate includes July S&P Global U.S. Services PMI, 9:45 a.m., and ISM Services Index, 10 a.m., and Fed Senior Loan Officer Opinion Survey, 2 p.m. Scheduled Fed speaker slate includes Goolsbee, 8:30 a.m., and Daly, 5 p.m. Market snapshot. S&P 500 futures down 3.6% to 5,184. Stocks Europe 600 down 2.3% to 486.40. MXAP down 6% to 166.21. MCAPJ down 4.1% to 530.79. Nikkei down 12.4% to 31,458.42. Topics down 12.2% to 2,227.15. Hang Seng Index down 1.5% to 16,698.36. Shanghai Composite down 1.5% to 2,860.70. Sensex down 2.6% to 78,911.70. Australia S&P ASX 200 down 3.7% to 7,649.56. KOSPI down 8.8% to 2,441.55. German 10Y yield minus 3 BPS at 2.14%. Euro up 0.5% to $1.0970. Brent futures down 1% to $76.06/BBL. Gold spot down 0.7%. 0.7% to $2,425.51. US dollar index down 0.72% to 102.46. Top overnight news. Japan's Nikkei stock average closed down 12.4% in its biggest single-day percentage fall since 1987, a historic drop triggered by disappointing US jobs data and a further rise in the yen. Highest turnover day ever for TPX-ATRL and yen, second largest drop index drop since 1987, TPX had 131 stocks close limit down, NKY had 20. Retail margin length is at highs. MKT underestimated CTA selling, overestimated domestic support levels at 38, and 34. Maybe 25. WSJ/GSGBM. China is successfully bypassing US export controls to obtain high-end AI chips. China's government reiterated its intent to bolster consumer spending. The government has been beating this drum for a very long time, but efforts thus far have failed to yield tangible results. NYT/BBG. Goldman increased its 12-month recession odds by 10 pp to 25%. The bank continues to see recession risk as limited not only because the data look fine overall and does not see major financial imbalances, but also because, as Chair Powell emphasized last week, the Fed has 525 BP of room to cut the funds rate and would surely be quick to support the economy if necessary. The bank changed its Fed forecast after the employment report to include an initial string of 3 consecutive 25 BP rate cuts in September, November, and December, versus quarterly cuts previously. GIR. Berkshire Hathaway slashed its Apple stake by almost 50%, while its cash pile soared to a record $277 billion. Suppliers to the iPhone maker slumped amid the broader sell-off, even as some analysts said Warren Buffett may simply be taking profit. BBG. Iran rejected US and Arab efforts to temper its response to the killing in Tehran of Hamas's top political leader, as authorities were investigating the security breaches that led to the attack. Iranian prosecutors said Saturday that they had opened a formal investigation into the killing of Ismail Haniyeh, which came hours after an Israeli strike killed a senior Hezbollah commander in Beirut. The two attacks, following a rocket strike on a soccer field in the Israeli-controlled Golan Heights, escalated a recent cycle of violence and threatened to push the region to the brink of war. WSJ. The traditional playbook when it comes to extrapolating economic data may not be relevant in the post-COVID era, the creator of the SAM rule about how a 50 BP increase in the unemployment rate signals a recession, expressed skepticism about applying that benchmark in the present landscape. Barron's AI spending spree creating anxiety for tech investors as shareholders want more tangible proof that all the expenditures will drive profits in the future, but tech management teams suggest they won't be dialing back anytime soon as they fear having inadequate capacity to capitalize on the AI opportunity. FT. PE firms accelerate deal-making activity as they prepare for the start of Fed easing. Ares, Apollo, Blackstone, and KKR deployed $160 in CQ2. FT. GSPB. On Friday's flow, we saw broad-based net selling across all major regions, led by DM Asia. Japan saw the largest one-day net selling since March 20. While there was significant performance degradation on Friday, as Marco pointed out, there was no further degrossing by HFS per Prime data. Worth noting, both Prime plus franchise flows in the US were orderly and relatively modest on Friday. GSPB. A more detailed look at global markets courtesy of Newsquawk. APAC stocks mostly slumped following last Friday's continued sell-off on Wall Street owing to disappointing jobs data which sparked recession concerns, while heightened tensions in the Middle East linger as markets await Iran's retaliation. ASX 200 declined with tech, financials, and real estate leading the broad retreat seen across all sectors. Nikkei 225 continued its aggressive slide and dipped beneath the 33,000 level for the first time since early January, while the index entered into a bear market along with the topics. Hang Seng and Shanghai Comp showed early resilience, with the mainland initially kept afloat after Cakes and Services PMI top forecasts, while China recently laid out its priorities to spur consumer spending and the State Council designated 20 key steps to expand basic consumption. However, the bourses later conformed to global losses. Nikkei 225 unofficially closes at 31,458, 12.4%, closes with a record daily points fall, exceeding the drop on Black Monday in October 1987. Top Asian news. China issued guidelines to promote high-quality development of service consumption, according to Bloomberg. China's government on Saturday laid out its priorities to spur consumer spending as weak domestic demand continues to weigh on growth, in which the State Council designated 20 key steps, including exploring the potential to expand basic consumption in areas such as catering, home services and elderly care, according to a statement posted on the central government's website. EU capitals are set to back tariffs on Chinese electric cars, with member states likely to support the imposition of proposed tariffs on Chinese EVs in November, according to FT, citing the bloc's Trade Commissioner Dombrovskis. BOJ minutes from the June 13 to 14 meeting stated that a few members said import prices are rising due to the recent yen fall, creating upside inflation risk, while a member said cost push inflation could heighten underlying inflation if it leads to higher inflation expectations and wage increases. Furthermore, one member said the BOJ must raise rates at appropriate timing without delay, although another member said a rate hike must be done only after inflation makes a clear rebound and data confirms heightening in inflation expectations, while members agreed recent weak yen pushes up inflation and warrants vigilance in guiding monetary policy. Japanese Finance Minister Suzuki says stock price is determined by the market, expects economy to gradually recover, cooperating with BOJ and FSA and closely monitoring markets with a sense of urgency. Highly interested in the current stock market situation. Japan's Chief Cabinet Secretary Hayashi says they are monitoring financial situations both abroad and domestic with a sense of urgency, says it is important for the government to make a judgment on the market calmly. Thai Finance Minister says the stock market fall is being driven by external factors, should be supported by government measures. European bourses opened with marked downside, following the APAC pressure post-NFP, with sentiment hit further by updates concerning Apple and NVDA. Since, benchmarks have lifted slightly off worst but remain under marked pressure. Euro Stoxx 50 -2.3%. In brief, APAC pressure was pronounced with circuit breakers triggered in Japan and South Korea, while the Nikkei 225 closed with a record daily points fall. Sectors in the red. Energy lags as crude benchmarks come under renewed pressure, with tech hit on sentiment and AAPL/NVDA, while banks slump as yields fall and pricing for central bank easing lifts. Infineon opened as the DAX 40 laggard after missing forecasts, narrowing guidance, and announcing layoffs. Stateside, futures in the red given the above but have begun to consolidate just off worst levels, with news flow light and as we await ISM services and Fed speak for direction. ES -2.4%, NQ -3.9%. Bloomberg headlines this morning suggested that traders are pricing a 60% chance that the Fed will cut rates by 25 bps in the next week. Top European news. UK PM Starmer vowed that those responsible for the disorder and chaos that's spreading across UK towns and cities will be punished for what he described as far-right thuggery, according to Bloomberg. Infineon, IFXGY, Q3, your revenue 3.7 BLN, EXP 3.8 BLN, net 403 MLN, EXP 447 MLN, adjective gross margin 42.2%, EXP 40.3%, Adjective EPS 0.43, EXP 0.42. Further improvement to revenue and earnings seen in Q4, 5 forecasts are well within the prior guided range. It is anticipated that revenue will increase in all 4 segments Q/Q4 guidance, revenue 4 BLN, EXP 3.9 BLN. CEO says they are to cut around 1.4k jobs globally and will move an additional 1.4k. 3.6% weighting in the DAX 40. FX. Hefty losses to begin the week for the USD, with the DXY down to a 102.41 base as pricing for Fed easing ramps up considerably and as JPY strengthens significantly. USD/JPY down to a 141.70 base versus a brief high point of 146.56, action which comes as yields globally slump and differentials become more favorable following the BOJ's hike in addition to its typical haven status amid the broad sell-off. You're benefiting from the USD's pressure but with upside for the single currency cap/hampered by strength in the JPY and CHF, EUR/USD holding around 1.0950 just shy of the 1.0975 peak. Cable more contained and somewhat torn between USD pressure and EUR strength, with yields not providing as much direction for GBP given the extent of last week's moves around the bow. Antipodeans lag on the risk tone, AUD and NZD down to lows of 0.6350 and 0.5851 respectively. Fixed income. Fixed benchmarks bid as the post-NFP sell-off reverberated into and was exacerbated during APAC trade. The odds of Fed easing have ramped up even more, with a 50 BP cut almost entirely priced for September and implied pricing for a 25 BP cut in the next week at 60%. USD's at highs, yields lower across the curve with just the 20-year and 30-year remaining above 4% at lows of 4.08% and 4.01% respectively. EGBs and gilts in fitting, bonds up to a 136.28 peak and on track for a 10th consecutive session of gains, while gilts are also at highs but slightly more modest after last week's action. No real move to the session's final PMIs and EZ Centix, though both PMIs and Centix remain downbeat on Germany, with the latter noting that recession bells are ringing again in Germany. Commodities. Crude is conforming to the broader risk aversion after the U.S. jobs data on Friday stoked fears of a recession against the backdrop of sluggish Chinese demand, though downside has at times been cushioned by ongoing geopolitical tensions. WTI and Brent at the low points of session parameters, below USD 72.00/BBL and nearing USD 76.00/BBL respectively. Precious metals lower across the board as the USD managed to pick up slightly from worst levels, and with XAU being outshone by marked JPY and fixed bids, holding around $2,430 per ounce after being as high as $2,458 per ounce overnight. Base metals are lower across the board given the mentioned risk tone and despite better than expected Chinese cakes and services PMI. Saudi Arabia raised its official selling price for Asia in September by 20 cents to USD 2.00/BBL above the Oman/Dubai average, while it set the OSP to NW Europe to plus USD 1.25/BBL vs ICE Brent and to the US at plus USD 4.10/BBL vs ASI. NHC said Tropical Storm Debbie is strengthening over the southeastern Gulf of Mexico, while it later stated Debbie has strengthened to a hurricane and is expected to make landfall in the Florida Big Bend area on Monday, which will bring a major flood threat to the southeastern United States. Geopolitics, Middle East. Israel conducted strikes targeting 2 schools sheltering the displaced near Gaza City, which killed at least 25 Palestinians, while the Israeli military said the strikes on Gaza schools targeted militants operating there. Israel also conducted a strike in the West Bank which killed a Hamas commander. Israeli PM Netanyahu on Sunday warned Iran's axis of evil against attacking Israel amid expectations that Tehran and the militant groups it supports are readying retaliatory strikes, according to DPA. Iran-led retaliatory assaults are expected imminently and will likely be simultaneous, coming from Hezbollah in Lebanon, the Houthis in Yemen and Iran itself, according to Israeli officials cited by Bloomberg and Iran International. Iran's Revolutionary Guard said the terrorist act of killing Hamas chief Haniyeh was designed and executed by Israel with the support of the criminal U.S. government, while it added that the adventurous and terrorist Zionist regime will decisively receive the response to this crime. Furthermore, the IRGC said Tehran's revenge will be severe and at the appropriate time, place, and manner, according to Reuters. U.S. Secretary of State Blinken told his G7 counterparts on a conference call on Sunday that an attack by Iran and Hezbollah against Israel could begin within 24 to 48 hours, according to Walla News. IRGC sources told iNews Britain that Iran's response to Israel could come no later than Tuesday or Wednesday. Egypt's foreign minister held a call with Iran's foreign minister and stressed that recent developments are unprecedented, very dangerous, and threatening to the region's stability. U.S. President Biden will speak to Jordan's king on Monday and will convene the National Security Team on Monday in the Situation Room to discuss Middle East developments, according to the White House. U.S. Secretary of State Blinken spoke with Iraqi PM al-Sudani and emphasized the importance of all parties taking steps to calm regional tensions and avoid escalation, while Iraq's PM told Blinken in the phone call that preventing regional tensions is tied to stopping Israeli aggression on Gaza. It was separately reported that Blinken told G7 ministers that Iran and Hezbollah may attack Israel within the next 24 hours, according to Axios. White House's Feiner said the U.S. is trying to prepare for any scenario in the Middle East by warning citizens to leave Lebanon, and the U.S. is moving an aircraft carrier to the Middle East purely for defensive reasons, while Feiner said the overall goal is to turn the temperature down in the region, according to a CBS interview. UK Foreign Office said Britain temporarily withdrew the families of officials working at the British Embassy in Beirut due to a highly volatile security situation in Lebanon. U.S. Central Command forces said they successfully destroyed an Iranian-backed Houthi missile and launcher in the Houthi-controlled area of Yemen. It was separately reported that Yemen's Houthis said they targeted MV Groton in the Gulf of Aden with ballistic missiles. Israel could reportedly preemptively strike Iran in the scenario that intelligence was to show that an attack was imminent, via Times of Israel. U.S. is reportedly willing to guarantee to Israel that it will be able to renew fighting against Hamas in Gaza after the first phase of a potential ceasefire and hostage deal, via Times of Israel. Geopolitics, other. Ukrainian President Zelensky announced the arrival of F-16 fighter jets and said they are already in use in Ukraine's skies, while he said Ukraine does not have enough F-16 pilots or jets and hopes training will be expanded. Furthermore, he plans to discuss at the Ukraine-NATO Council the use of neighboring countries' aviation for air defense work. Ukrainian military said it struck a Russian submarine and anti-aircraft system in Crimea, while it also struck Russia's Mariupol airfield, as well as oil fields and fuel facilities in 3 Russian regions. Russian Defense Ministry said Russian forces captured a settlement in the Donetsk region. North Korean leader Kim said they will have a more improved level of nuclear readiness in the near future to respond to any challenges, while he added that stockpiling and improving nuclear weapons is the best way to counter the U.S., according to KCNA. Philippines and German defense ministers committed to concluding a broader defense agreement, while the Philippines defense minister said they invited German ships to participate in exercises. U.S. event calendar. 9:45, July S&P Global U.S. Services PMI, EST 56.0, prior 56.0. 10 o'clock, July ISM Services Index, EST 51.0, prior 48.8. 1400 hours, Senior Loan Officer Opinion Survey on Bank Lending Practices. 174,4492,106. More market stories on Zero Hedge. Japanic Monday, Japanese bonds, stocks halted after plunging into bear market as everything crashes everywhere. Bronx Ada resigns after being caught on camera allegedly attempting to meet 13-year-old boy. Retail traders furious as outages hit major U.S. brokerages amid Black Monday chaos. Never miss the news that matters most. Zero Hedge. U.S. retail traders are panicking this AM after likely receiving push notifications on their smartphones about market turmoil in Asia and Europe, which has since spread to the U.S. pre-market. Now that the cash session is about 15 minutes underway, website monitor Downdector reports outages are emerging across several major U.S. brokerage houses as everyone tries to log into their accounts and sell stocks. Downdector reports that users of Charles Schwab, Fidelity, Ameritrade, Vanguard, and E-Trade are all reporting website outages, which have been surging around the start of the U.S. cash session. For more color on the global stock meltdown, read this earlier note. Black Monday, futures plummet as VIX hits 62, Japan suffers worst point drop in history. Just panic everywhere, courtesy of Bloomberg. Here's what ex-users are saying. At Charles Schwab, WTF super not cool, so close to losing a long-time TOS user after months of downhill app performance since the handoff from TDA #Thinkorswim $SPY $QQQ $IWMPIC.Twitter.com/WVAH by 9SSP. No slack for Romeo, at NS4R101. August 5, 2024. Police car light https://t.co/WGXC2K5 YAT, formerly Thinkorswim, shows a technical problem and is already preventing trades, while Robinhood has halted trading on their site. These financial institutions are protecting their rigged and corrupt legacy systems. It's time for change. pic.twitter.com/nsnxr59ml. Crypto Realtor, at McCryptoRealtor. August 5, 2024. Won't even let people log into Thinkorswim. Are you fucking serious? At Charles Schwab, pic.twitter.com/HQHYKZXRUI. Colton Groves, at Iskaltong Roves. August 5, 2024. Weird. I can't log on to my brokerage account to buy more $TSLA. Tried multiple times. Something tells me this is not by accident looking at how red the market is today. Dr. Jack, at Dr. Jack 16. August 5, 2024. Anyone else unable to log into their brokerage account? Antiganda, at Antiganda7846. August 5, 2024. Can't log into at Charles Schwab brokerage account. Unacceptable. Eric Stevenson, United States, at EO Stevenson. August 5, 2024. My brokerage account hashtag USD hashtag NPIC.twitter.com/HWTUSYHWTI. Vinchsr, at Vicky_EVOL. August 5, 2024. At Charles Schwab won't even let me log into my account. Have to appreciate the flimsy infrastructure of these brokerage firms on days where it's most critical to have eyes on your portfolio and be in a position to take action that best fits your own needs. Hashtag crash. Weldon Boley, at Weldon Boley. August 5, 2024. They solved the problem. You cannot dump your stocks if you cannot log in. Big Fish, at Big Fish 3000. August 5, 2024. Asterisk developing.